Good morning and welcome to the Retirement Recap for Friday, August 7th. With me is Rob Milas, our Chief Investment Officer, and our lead consultant, Mark Salamone. So Rob, you keep surprising me each week, introducing not only market things, but animals as well. We had a water buffalo, I think, a kangaroo, and I see a snail this week. So what's that about?
Yeah, Rich. We do introduce the snail. It's been a slow climb up for the S&P 500 in terms of performance. So we had 5 consecutive up days, but we were only up about 3%. So like I said, slow and steady climb for the snail this week. So that's the good thing on the equity side. Interestingly, on the fixed income side, we're seeing across the yield curve that rates are at all-time lows, and they continue to hit those lows. And so while that's kind of good information for the equity market in the short term, in the long term, it kind of says that growth might be a lot slower than it had been. So equities and fixed income, really, in terms of the outlook for the market or outlook for the economy, are at odds with one another right now. So we'll see how it plays out, Rich.
Well, that's great. I know we talked last week about interest rates being so low, and that's good for mortgages, but not really good long-term information about the economy. So we'll have to see where that goes. So this has been a crazy year. We ended the year with new legislation called the Secures Act. In April, we had, as a result of COVID-19, new legislation called the CARES Act. And Mark's going to talk about the CARES Act in a different way, specifically how it influences and impacts nonprofits and 403B plans. And I have to warn you, this is really good information. You must pay attention to it. And it's about how 403Bs always seem to be adapting to legislation differently.
That's right. The 403B, which is a pretty common retirement plan for nonprofits, typically has a lot of the same features of a 401k. However, when it comes to the CARES Act in this legislation, where participants can now get access to more money from their retirement plan if they need it, the 403B does have a significant difference in a lot of ways. In some situations, some of the funds offered in these 403B contracts may have significant penalties and surrender charges. So as a result, plan participants in a 403B don't have the same access that others maybe in a 401k might have. So this is something that 403B participants really have to keep an eye out for. And normally, if they're going to take some sort of distribution or some sort of transaction with their account, you'll be warned of it, but most of the time you don't know that up front. So this is one of those things that the whole industry has been trying to correct with 403Bs over time, and it's getting better. However, there are still a lot of 403B contracts out there that have this issue. And not all of them have it, but it's just something to keep in mind as participants are looking to their 401ks and 403Bs. 403Bs in particular just have one more thing they have to be concerned with when going through something like this.
And keep in mind, this isn't just for CARES Act distributions. This could be at retirement or anytime you need to access your money. And a lot of times, as Mark said, when this happens, it's in 403Bs that are in legacy contracts with old, maybe insurance companies. But nonetheless, it's really important to know what you have. And if you are in a nonprofit, in a 403B, you have to ask these questions. And it's one of the most frustrating things about 403B plans when we find this out. It's just simply not fair. The other thing that bothers me greatly is investment fees, although this has some good news. So we're on a very healthy trajectory with investment fees being lower, specifically investment fees in retirement plans. So majority of the time, 63% of the time, mutual funds are the investment vehicles within retirement plans. And all of the mutual funds together represents about $6.4 trillion. That's a lot of money. And the healthy trajectory we're on is the reduction or compression of these investment fees. So Mark, let's talk a little bit about that.
Yeah, so with 401ks, the great news about fee disclosure and the work that a lot of plan sponsors that have been doing over the years have been the compression of investment fees. And this is not the case for all retirement accounts, individual accounts, and where you don't have oversight on these investment fees, you're not seeing that price compression. And you can see this as an example. The average mutual fund fee is over 1.2%. However, that's not the case when it comes to retirement plans like 401ks, where a lot more index funds are being introduced. So the good news is, although we've got different issues in the retirement plan landscape, fees have been a real focus, and we're seeing that impact on retirement plans.
But I think the general theme here is awareness. So the fact that now plan sponsors have access to this post 2012, and working with a consultant to help decipher that information is really helpful in articulating what the fees are. And you should always still benchmark your plan, right? Because if you know what your fees are, you still don't know if they're competitive until you get a benchmark for them. So this is really good news. We love to see the compression. Index funds and non-index funds, regardless of the type of management you have, are all coming down. And that means more money stays in the plan of plan participants and less goes out. One of the things we always say at Alpha Pension Group is you can't control what's going to happen in the market, but you certainly can control what you pay to be in the market. So that's really good news. So before I leave you with all the wonderful resources that we have for you at Alpha Pension Group, I'll mention that Mark's a pretty happy guy today. 2 special things are happening for him today. Number 1, it's National Beer Day. That's something we can all get behind. The second, a little bit more interesting, is National Lighthouse Day. Mark's a big lighthouse guy. So Mark, cheers. Enjoy that tour you have later this weekend. And for everybody else, thanks for joining. We have some great information, as I always mention, on our website. On LinkedIn, we have some great stuff as well. And Twitter, we're always sending information out as we get it. So thanks so much for joining, and we'll see you next week.